Hi, what's up, guys? This is Say China from Sniper X Forex Empire here, mental. Okay, guys, so today we're going to be learning about what we call liquidity in the forex markets. But before we get to that, it's an interesting topic as always, right? So before we get to that, guys, make sure that if you're new to this channel, you hit the subscribe button. You also turn the notification bell so that whenever we upload a video on this channel, you'll be the first person to view that video, right? If you're also a member of this channel, make sure that you always come to the channel site, right? Then you come where you see the videos so that you have a look at the other concepts that you didn't actually cover or what you haven't learned yet, right? Every other concept pertaining to forex trading, we're going to be covering that as the year proceeds, and we'll be uploading those videos on this channel. So don't miss on anything. If you've missed on anything, you always come to the site and have a look at our uploads, right? Okay, so let's get straight to the liquidity concept that I've mentioned, right? Okay, so we have what we call liquidity. We have what we call liquidity pools in the forex market, right? So a liquidity pool is simply a zone with stop losses. So liquidity basically is a stop loss. That's liquidity. That's the best definition for liquidity, right? So we have different types of liquidity, of different models of liquidity, right? For us, we cover about 7 models of liquidity, right? But for the purpose of this YouTube video, I'm just going to cover 3, right? And I'll explain with one model, right? So we have what we call buy stops liquidity and sell stops liquidity. That's the first one, right? Then we have what we call equal lows and equal highs. Then we have trend line liquidity, right? So let's go to the first one, which is buy stops liquidity, right? So when you talk about buy stops liquidity, it is originated by stop losses of sell orders, right? After the buy stops liquidity is taken, the market reverses to the downside because banks use this liquidity to place sell orders in the market, right? Let's look at the example, right? So we have different things that we have to look at, right? If you're talking about the BSL, we look at the previous month high, we look at the previous week high, look at the previous day high, high of the day, and equal highs, right? Or a previous resistance in the what? In the market, right? So we have what we call equal highs, right? So the existence of equal highs where the market bounce on a certain level, they come again, they bounce on a certain market, right? To retail traders, they think that the market will come on the third time, for the third time, creating what they call triple tops, something like that. They expect the market to respect that resistance. They'll be saying this is now a strong resistance, right? But the concepts that we actually use, right? If a zone is tapped a couple or a number of times, it becomes weak. So price can actually penetrate, can break that zone, right? So market makers use, or they take advantage of the knowledge that we have from simple forex trading textbooks, that this is now a resistance zone, right? So they will make price push a little bit higher than this zone, taking the liquidity that is actually lying within this zone, right? So for retail traders, they will actually take sells on this zone and they put their stop losses slightly above this zone, right? So BSL is simply a move that market makers use to grab the liquidity that is actually lying above these equal what? Equal lows, right? So this is what called buy stop liquidity, right? At times we might just have, maybe it's a previous week high, previous day high, or high of the day, right? Price will just move slightly above that zone, taking all the stop losses that are lying in this region, then price will drop like that, right? So this is what we call buy stops liquidity. Then the second one, we have what we call sell stops liquidity, right? So this one is originated by stop losses of buy orders. After the SSO is taken, right, the market reverses to the upside because banks, they use these to place orders in the what? In the market, right? So we actually focus on the previous month high. If you're a swing trader or a position trader, focus on the previous month high, previous week low, previous day low. If you're an intraday trader, previous low of the day, low of the day for that very day, right? Or retail support, right? So for retail traders, when they see price bouncing again on a certain zone, they will actually think that this is a what? This is a strong support zone, right? So when price is coming to that zone for the third time, they actually think that this zone is going to hold, right? But the market makers, they'll actually push the market slightly lower than the zone, trapping all the buyers who are in the market already, right? So this is how the stop loss is what? the stop losses are actually taken out, right? And how they actually take those equal lows liquidity. So in this case, I'm actually covering what you call SSL liquidity, sell stops liquidity, and the equal lows, as I have just done on the above example, right? So this is what you call sell stops liquidity, where price actually goes lower than a certain zone that will have been created in the market, right? Either a previous month high, previous week low, previous day low, or the low of the day, right? The moment we have a price bouncing on the same level like this, these become equal lows. So we have what we call equal lows liquidity, right? Equal lows liquidity. This is the example of equal lows, right? Then on sell stops liquidity, it's just a matter of price pushing slightly lower than a zone that they'll have what created, grabbing some stop losses for traders who have gotten in the market here, right? Then they push upwards, right? So in this case, we've actually covered the sell stops liquidity, buy stops liquidity, and then the equal lows and the equal highs, right? Then the third type that we've actually mentioned on the three models or three types of what we call trend line liquidity, right? If you have a bullish structure like this, we always expect to take our buys in the demand zones, right? But as price will be dropping like that, is going to trap other traders by creating some small waves within this structure, right? Some traders or retail traders will actually start trading the trend line concept, whether they will say this is the first touch, second touch. On the third touch, they're actually taking sells. On the fourth touch, they're actually looking for other sell trades, right? But the market won't actually do that. They will simply move up, trapping all this liquidity that is lying in this region. Remember, if they take sells on this zone, they're putting their stop loss slightly higher than that zone. Sells on this zone, they actually put their stop losses slightly higher than that zone, right? So this impulse move that will actually come according to the structure concepts that we actually covered in the other videos, they will be grabbing all these trend line what liquidity, right? So if we are in an uptrend, it's just the same case, right? This is trend line liquidity, right? The other advanced types of trend line liquidity will actually be covered in the mentorship programs, right? So if you want, you actually follow us and get to learn more of these trend line liquidity concepts, right? So this is actually what you call liquidity. These are the types of liquidity that we actually have in the what, in the forex market, right? So market makers will actually cause a move that grabs that liquidity, right? Either sell stops liquidity, buy stops liquidity, equal lows, equal highs liquidity, or trend line liquidity, and the other advanced types of liquidity that we have in the market, right? So in the other videos, we'll also cover on the types of stop hands or stop loss, right? Or the manipulation that is actually done by market makers in order to grab this liquidity, or what you call liquidity engineering, so that whenever you are analyzing the forex market, you'll be able to notice where liquidity is lying. Before you actually take your trades in the forex market, make sure that you are seeing where stop losses are lying or where liquidity is lying, so that you won't become a victim of liquidity grabs or stoppers in the forex market. So I just show you a few examples of the liquidity types that we're actually talking about, right? So if you look into this structure, you see that price created this high, they broke that high, that structure. That actually tells us we're in an uptrend, right? So price started coming down. But before coming to our demand zone there, right, they created this zone. So many traders will actually think that price is now reversing. Then they start taking some buys there, or they think they are already missing this trade, right? They start taking buys there, right? Then price will actually give another move to grab all this liquidity. So this is sell stops liquidity. This move was to grab all this liquidity, right? At the same time mitigating this order block that is on the lower time frame, right? Mitigating this order block, tapping our demand zone. Then the final rise actually came right there, right? Then we also have other traders now who will be looking at lower time frames. You actually look at this structure on lower time frames, you actually see that the market actually broke this low and they're coming down. So you'll actually be thinking that this is a move back to this order block or this supply zone, right? In actual fact, is the truth, right? That's the truth. But you have to look in the way that you're trading. Are you an intraday trader or you are a swing trader, whereby you look at the overall structure of the market, right? So this is a small structure on smaller time frames. So price managed to push back. It respected this supply zone. Then price started moving downwards. But what they are doing there, they're creating the buy stops liquidity, right? And this liquidity was just grabbed by this move after mitigating our demand zone. Price moved fast above that zone, trapping all these buy stops liquidity. So that's actually an example of buy stops liquidity, right? Let me remove this so that I show you. So if you look at this very point, right, price created what you call equal lows. This is an example of equal lows, right? Now if you scroll to the right, you see that the market at some point managed to come down and they grabbed the liquidity on this very zone. Let me actually scroll. Right, it's this zone. So price managed to move down and they grabbed the liquidity right there. Let me put a horizontal line there so that we all see how they grab the liquidity. Let me put it slightly here. Right. So all this move, price moved upwards, they broke these highs, they came back to grab just this liquidity before they continued moving way upwards, right? So this move was a stop and grabbing this liquidity, taking liquidity that is lying below these equal lows, because retail traders, they think that if price is coming back to this zone, it's just going to tap and respect that zone and move upwards, right? So they will give you a fake move or a fake breakout that is clearing all this this liquidity, right? That's an example of equal lows, right? Then I have mentioned trendline liquidity. This is another example of trendline liquidity, right? Retail traders, again, they'll be thinking first touch, second touch. On the third touch, they want to take buys, right? But the market will only respect structure. That's why I taught you on the earlier videos how to analyze with structure. The trend is going down. We broke this low, right? And price was just retracing to mitigate this order block. After mitigating this order block, now we are dropping. So this won't hold. It was just used to create liquidity. So we have buyers lying below this zone, lying below this zone. And when we are on the move down now, we are just breaking and trapping all those traders in our downtrend. So if you understand structure, you will actually take trades using those trend line concepts. Guys, those are just basics in forex trading. You actually won't make proper monies with those concepts, right? So you have to understand structure, right? Or trade trend lines that are in line with your with your major trend or the structure, right? So that's an example of trend line liquidity, right? Let's just go slightly further. So like I have explained before, this is another example of trend line liquidity, right? 1, 2, 3 on the fourth touch, they actually want buys. They take buys there before they realize they've made some losses. So the market is just making this move to trap all the liquidity that is lying below this zone. There is too much liquidity. There are stop losses below this zone. So that's liquidity, and it has been grabbed like that. They come back into the structure, they make it get that low order block, and we are dropping. That's another example of of trend line liquidity. So I think with these examples, I have actually covered almost all the types of of liquidity that I have explained before. So in the other videos, I'll explain how to trade more with these liquidity concepts. These are equal lows. Again, you can see they trapped that liquidity first, then they had to do that, right? So this is another example of the advanced types of liquidity that we have, whereby the market consolidate, right? So as they'll be consolidating, they are causing buyers, they're causing sellers to actually sell in this zone, right? They sell in this zone, they think they're going down for good, right? They also cause buyers to buy on these lows. Buyers begin to buy on those lows, right? Then they just give a move that takes their stop losses. So this was a liquidity grab, right? And this move again was a liquidity grab above this consolidation zone, right? So that's an example of of liquidity. Again, I think I've shown you an example of what we call equal highs, right? Okay, this is another example, right? So these are equal highs now when price is bouncing on a certain high in the market, right? So this push, right, was just created by the market makers to just grab the liquidity that is lying above this zone, right? So whenever you are trading, try to spot the zones where liquidity is lying so that you won't become a victim of liquidity, right? We always say if you don't see the liquidity, you become the liquidity, right? So trade carefully in this forex market. So guys, thank you for watching this video, and thank you for following. Always remember to subscribe, like, and share our videos with your friends.